Hi, I'm Brandon Curbow, CEO of Kayaking Ecstasy, LLC. Today, we'll be discussing Kayaking Ecstasy's financial projections. Okay. One reason that my partners and I chose this type of business is because we all enjoy doing water activities outdoors. Another important reason is because of the simplicity involved with the startup of this business, both structurally and financially. Now let's first take a look at our estimated startup costs. These costs include less than $1,000 in sales and marketing, an interactive website that will allow for online bookings for kayaking excursions. This website we priced at right around $2,000. Our general and administrative costs are estimated at about $700. We priced the bulk of our company shirts at $150. Our capital investments include 30 one-of-a-kind Oro kayaks and all water gear related and necessary for having a day of fun out on the water. This all together gives us a grand total of just under $40,000 for startup. In order to finance our business, each owner has agreed to invest $2,000 of capital that will be kept for business operation. We'll also be taking out a $40,000 loan from the Community Bank of Broward, which will give us a total financing of $46,000 minus our startup costs will leave us approximately $7,000, which we've agreed that will be reserved for business operation. Okay, we calculated our first month's revenue at $9,600 by charging only $60 per person per day. We estimate the size of each tour at 10 persons per tour, and we anticipate possibly our first month, possibly 16 tours, which gives us a total of $9,600. Based on the demographics of our area, we came up with a expected annual growth figure of 30%. In order to reach this projected goal, we have agreed to put 11% of gross receipts toward our marketing plan. Okay, Kayaking Ecstasy has also agreed to depreciate all equipment and office equipment over 36 months using a straight line depreciation calculation for our book purposes. We'll depreciate all water gear and accessories in the same year purchased using the same method. Also, in order for our 30% annual growth projection, we have agreed to, in order to accommodate our 30% growth projection, after our third year we will purchase 10 more kayaks and all related water gear and accessories. Let's see, our first month's projected revenue, if we factor in the 30% annual growth, we come to a total revenue or gross revenue of $132. We have no cost of goods, which will bring our gross profit to the same price. Gross profit margins 100%. Operating expenses are $36,968. Income from operations comes down to $95,469. That gives us an operating profit margin of 72%. Income before taxes comes to $94,243. I'll go over how I came to that figure on the next slide. We estimate our income tax liability for our first year at $23,598, which will give us a net income of $70,645. That leaves us with a net income margin of 53%. Calculation of income before taxes. Okay, I told you I would go over this. We started with income from operations at $95,469. We added in our interest income of $386, and took out interest expense of $1611 minus also our other expenses, our uniform expense of $150. That gives us our income before taxes figure that was explained on the previous slide. Okay, our 5-year annual income. We expect our gross profit margin to remain unchanged at 100%. Operating profit shows a gradual increase of 11% over the next 5 years, which will bring our starting percentage of 62% up to 83%. Our expected increase in our net income is 10%, which will increase us from 53% starting and ending at 63% over the next 5 years. If you look at the chart on the right, that gives you a good picture of where Kayaking Ecstasy will be positioned over the next 5 years. Some more general information about the loan. We took out a $40,000 loan at an interest rate of 5.5%. We'll be paying back this loan at a monthly payment of $17.64 per month. Kayaking Ecstasy will also have the loan completely paid off within the first 2 years of business operations, leaving us completely debt-free. Cash flow projections. Kayaking Ecstasy is projected to have a positive cash flow by the end of its first month of operations. We also project our year-end cash flow is projected to be over $75,000 before distributions to owners. Our second year, we expect an increase of almost 10%, and in year 3, a substantial increase due to the fact that we have no more debt. We've paid off our startup loan, and we plan to continue to stay debt-free from this point forward. Okay, I'm going to show you guys this slide real quick, and then I'm going to be getting in the picture here. Okay, what I learned from this class. The importance of a business plan. It's very important to have a business plan. We pretty much used a business plan as our blueprint throughout the whole project. We used it as a guide to look back on and to make sure that all our figures matched with everything, and what our projections were they met or were they not met. I learned the importance of working as a team. One very important thing was work delegation. Not having to take on the full load yourself was a big help in this class. Let's see. Learned a lot about how to build a business from the ground up. There's a lot of research involved in that. Learned a lot about the research process. None of us knew anything about this business when we started it. Now that we've finished, we could pretty much probably go out and really start a real one ourselves. Learned how to be hands-on in several different accounting areas. Taxes, one. I'm a numbers guy, so the financial and budgeting area was fun for me. Working with a team also helped me build confidence to get ready for doing accounting out in the field. It was fun, team experience. It was necessary for the confidence needed. I do believe. I'll be getting back behind the camera now, and we'll finish up our last slide, and that will be the end of this presentation. Bear with me. Okay, well that concludes my presentation for Kayaking Ecstasy's financial projections. I appreciate everyone's time and thank you for watching.